the SEP IRA are some of the best retirement accounts for business owners that want to reduce their taxable income while simultaneously investing in their future and in an asset that will grow in value over time versus decrease.
Grow in value over time versus decrease, like vehicles and bonus depreciation, Section 179, etc. What exactly is a solo 401k and what retirement account of these two are the right situation for you? So the 401k that you're familiar with at an employer or a company that you work for. The difference is the solo 401k is specifically designed for business owners that don't have any employees. The contribution limits are a hard cap of $69,000, which means you could potentially reduce your taxable income by $69,000 just by opening up a solo 401k and funding it. The contribution limits, how you calculate what your cap is a little bit complicated, but I'm gonna try to make it very simple for you. As the employee, the max contribution is $23,000 if you're under 50 years old, and it is $30,000 if you're over 50. Now, as the employer, the max contribution is 25% of net earnings from self-employment, so the total combined between those are gonna be $69,000. Another example of why it's really cool, if you and your spouse both have your own, side hustles or businesses, you guys can both use this strategy and duplicate it. The kicker is you have to have two separate businesses. So if spouse one is selling all types of products on like an Etsy shop and spouse two is selling coffee, they're both two different businesses, you can duplicate the strategy. Now you might be saying, well, Brooks, how in the world do I set up a 401k? Is this hard? Is it complicated? How much is it? Have anybody that you recommend? I do. I have a financial advisor that I've been with since I've been around 18. I trust him implicitly. If you want to reach out, just shoot us a comment or an email down below or get in touch with us somehow. We can kind of refer you out. We don't get any kickbacks from the financial advisor, full disclosure. It's just, if I'm gonna recommend somebody, I want my clients or potential clients or people in general to be well taken care of and not just taken advantage of in the financial realm. The next retirement account that we're gonna talk about is the SEP IRA. SEP IRAs are for businesses with employees. So if you have employees, this is the one that you want to go with. It's very similar to the solo 401k as far as contribution limits and how it's set up a little bit. It's very similar. The kicker is you're running a successful business, you've got a partnership or single member LLC or S corporation. A SEP IRA is meant for businesses with employees. Again, the reason why that's set up, and here's a really important rule that you need to know. The same percentage that you contribute to your own SEP IRA, you have to match your employees. So if you have 10 employees, they're making $100,000 a year salary, like that's their gross. Whatever percentage that you match your own, you fund your IRA, you have to match for them as well. This is for businesses that really have good cash flow, they're established, and they're also looking to reduce the tax liability of their business. And if you have a partnership or an S corp, that all flows through back to you as an owner. Essentially, you're reducing your personal taxes. It's very kind of convoluted to make in a short form video. Get with us and we'll kind of explain exactly how it flows through. But essentially what you need to know is you can reduce your taxable income by $69,000. You have to match your employee's contribution rate that you set as your own. And number three, the best part is you're investing in an asset that grows in value over time. Why I recommend this over sometimes recommending an S corporation election, don't get me wrong, you can use these in conjunction with each other. I'm not saying it's an either or, but you have to consider cash flow for the business. And that's why I always recommend, let's set up a meeting to talk about this, that what makes sense for you. Even another alternative to depreciating vehicles, I know it's very popular online to see, let's write off the full cost of my G-Wagon or what. Is it essential to the business? Could you survive without buying that vehicle for the business for business purposes? What I want to get across to you is if you do a solo 401k or a SEP IRA, you're putting money back that will grow in value over a long period of time versus a vehicle will always go down in value. you're throwing money. Yes, it is a tax deduction, but not all tax deductions are created equal. Because if you purchase the vehicle, name me a vehicle that has gone up in value outside of exotic cars and supercars and stuff like that. It always depreciates. You're gonna lose money on that investment because vehicles depreciate, they break down, the wear and tear, etc. So that's why I really like to recommend these two retirement strategies over potentially accelerated depreciation methods for any vehicle purchase. Back to the S corporation election. You're a business that's starting out and you're looking, the solo 401k is probably the best alternative to an S corporation election, depending on cash flow and your taxable income. Because if you're only making $50,000 from your side hustle or your solopreneurship, yeah, you could do the S corporation election, but when it all shakes out, after the increased cost for compliance, you're having to pay yourself a salary and you don't really run payroll currently. There's associated costs with that. Not to mention the requirements by the IRS, all the potential pitfalls that you could fall into if you do that. I'm not saying it's a bad strategy. I would recommend a solo 401k over the S corporation election if you're only netting about $40,000 to $60,000, because I would rather you invest in your future and get funding for your retirement versus doing the S corp election where really you're only skirting the self-employment tax. And after you factor in the increased compliance cost of operating the S corporation correctly and legally, most of the time it's just worth it to just do the solo 401k. So I hope that this video gave you some ideas about what strategies there are to lower your taxable income as a business owner that are not kind of clickbait material. Like, this is real raw stuff. Please schedule or reach out to your current tax advisor to really discuss this in detail, because this is a blanket video for general purposes and everybody's tax situation is a little bit different and everybody wants different goals out of their tax strategies. So if you like this, I would really appreciate it if you leave a like, comment below, subscribe. Go check us out on our website. Go check us out on Facebook. I'm just providing free content, and most of the time, if you reach out with a quick email or something, I'm more than happy to answer free, quick questions. Love doing this. Really puts a spark in my soul a little bit. Really just want to help everybody accomplish their goals and not give away their money to the government, especially whenever it's hard earned as a business owner. So I appreciate your time, and click the links below.